Good morning, YouTube. Good morning, good morning, good morning. Hope you're doing well. Joe, mate, inside Discord, mate. If you've got any questions, feel free to reach out now, bro. Off, we've concluded that trade, mate. So if there's anything you want clarity on, just give us a shout. Yeah, I'm anticipating this to come and drive out these highs up here. So I only took one contract, so I'm already out. But if you are holding a position, obviously taking internal to external, as you mentioned, Leo. Yeah, exactly that, Leo. Fair value box, mate. Didn't catch it. Yeah, that's okay. I mean, you're new, right? So, oh no, not the ads.
Professor, you've got to try Otter. Here's how it works.
Yeah, it takes time. It takes time to get used to it, right? Honestly, it's you know, it goes against how most people trade, right? You know, trading super aggressively on the turtle suit, so it takes time. It's a mental shift. But the principles we were always looking for took place today, right? Yeah. So the trade that Leo took this morning was very, very good. So he's basically just used the X levels, so the M5 X levels, and he's gone out of a discount, right? Framing it off this SIBI, looking to drive out the lows. So just a very, very clean trade. You know, just supported by this higher time frame order block in terms of higher time frame context. 70.5 on the weekly DR. So, you know, lots of confluences there to frame a trade. So, but obviously there's pullbacks. So we've now got a purge on the Asia low. So again, it's a Tuesday of no news. And also, what do we have up here in terms of a whole site number, right? What's this? You know, it's a big fat whole site, right? 19.8. So, you know, the likelihood that it just dumps aggressively off, you know, 19.8 and doesn't come back is highly unlikely, right? So, you know, you're already getting the context that prices is likely to pull back and come and stop out those who have gone short early, right? So, you know, just purely that in context alone can support you. But then you're just looking to frame your entry to take price back up there. So what we always talk about and how we trade inside Red Pill is turtle suits, right? We're turtle suit traders. So this turtle suit on yesterday's low. Then we have our SMT, right? On the higher time frame, on the hourly, this is where we can start using X levels to start framing an entry, right? If we were anticipating price to then expand back up into highs. Okay, so boom, turtle suit. So if I drop down onto this 1 minute, okay, same principle with X levels, right? We know we've got a turtle suit, right? We can take this range. Okay, so if price is super aggressive, it's going to go out the premium side of this range. So what you can do is just jump down onto your 15-second chart, right? And on your 15-second chart, you'll notice that we had a ICT 2022 right in here, right? Was it in there? What time was it? 7:40. Yeah, right in here. So boom, boom, boom. There's your breaker block. If you wanted to frame it off a breaker, but I used the ICT 2022, right? So if you missed this hyper aggressive primary entry, I personally didn't trade this, right? I waited for the turtle suit and then I traded a secondary on this occasion. So we have if you go to your 15-second chart, you have a SIBI on the sell side, then you have your intermediate term high. Price violates that if, and then you're looking for your fair value gap, your breakaway gap, right? Your breakaway gap and your fair value gap. So this is your, if you go, this isn't, you need your 15-second chart. This is a 1 minute, but if you go to your 15-second, you'll see your breakaway gap and your fair value gap sat just above it. So price dips into that breakaway gap. Sorry, the fair value gap, which is above the breakaway gap, right? There's your entry. If you miss that, off the order block, which is a propulsion block for then continuation, right? So then you're just using X levels to then take out your partial. So you could have, if you wanted to, taken it back up to fair value on the 5, right, which was my initial draw, or gone all the way up to the 15, right, which is all the way up here. Right, which is essentially where we've gone. I'm anticipating them to clear all this muck out up here. So my trade this morning was very, very simple. Just a little base hit. Which is this little trade here. 744.25 up to 758. Only took one contract. With it being a Tuesday, having an absolute monster day yesterday. Just building a base, and didn't have the positions to scale out, so only took the one. But I hope that makes sense. So, you know, you're always wanting to be around your macro, right? Which we are, 4 o'clock, right? And we have our turtle suit. Then we're just using X levels to frame our entry, right? If you miss the aggressive primary, then you can look for your secondary. As soon as I get out, as soon as price breaks out of that 1 minute or that 15-second break, I'm not entering. I'm done. Like genuinely, I'm done. Like if I, you know, it's like literally, and this is my area of interest. Like if I'm not entering in that, I'm out. Like I missed the trade. I'm not good enough. And even here is super high risk for me. I don't particularly enjoy entering in that. All right. So as soon as it goes beyond here, I'm out. In terms of looking to frame an entry. Yeah, take it easy, Leo, mate. Well done this morning. Great trades, mate. Box, mate. Enjoy it. Daily goal smashed. What more do you want? But yeah, just to clarify what we were talking about this morning in terms of sort of fair value gaps and that sort of stuff, and RTH gaps. So if we look at this chart over here, and this is my monthly, weekly, daily chart. You know, if we go across to our weekly, you'll see that this is indicating this BISI on the weekly. So that's what these dotted lines reference. They reference the quad levels on that weekly BISI, right? And so quad levels in confluence with X levels provide basically a stacked confluence. You know, so all the way back down here, you know, with that, you know, at the upper quad, so at fair value on the daily dealing, on the daily X level dealing range, right? You know, so we've got, you know, if you just understand ICT principles, you know, if price is breaking, gets down to fair value of a range, it's likely to pull back, right? You're likely to get some form of retracement, right? So again, just hunting for an opportunity in this area for price to do that, pull back, right? But you can use it on all time frames, you know, whether you're using a 5-minute continuation model, right? So my M5 continuation model, which is what we traded yesterday, right? So I literally scalped this. So I took it from here back up to here. But M5 continuation model, so the upper quad on the 5-minute BISI.
When inspiration strikes,
Stop goes below the lower quad. All right. So there's various different ways you can utilize it. Also inverted fair value gaps. So if you see it like this on my charts, it's usually either trading a 5-minute continuation or it's an inverted fair value gap. That's usually what they are. Or the alternative is an RTH range. So yesterday, this is a high, this is the low of that RTH range, right? So if we go from here to here, these are the quad levels of the previous day's RTH range. So trading during regular trading hours. Now, if price is super heavy, right, and you're anticipating continuation, you wouldn't want to see price above this area here, right, above the lower quad and the 50%. So if price is heavy, it usually rejects in this area, right, between the lower quad and the 50% of the previous day's RTH. So I'll often have that just tucked on the side of my chart just as a reference, you know, depending on the time, depending on the schematic, depending on, you know, the confluences that we often talk about inside of Red Pill. You know, I can utilize this as, okay, well, inside of here is where I'd anticipate price to reject if price is going to reject, right? And then lastly, it's just mitigated and unmitigated ranges, which is slightly different. So if we just drop back onto the 1 minute. So in the purest sense, an unmitigated range is essentially an order block. That's what an unmitigated range is. Like if you just want like the really bare bones of it. But the principles of an unmitigated range are as follows. So anything to the left is when price goes through is a break of structure, which would be an unmitigated range. Anything to the right is a return to, so it's a displacement leg. Okay, so if we're looking at this piece of price action here, I've not even analyzed this, by the way, we're just doing it off the cuff. So this low, this high, when price breaks, is an unmitigated range if you go down onto your lower time frames, right? So you can see that when price breaks this range here, it comes back and mitigates, right? So 50% is like the easiest mitigation to always go for. There are variances for the lower quad and the upper quad, but these aren't quads, by the way. So this is 30%, 50%, 70%, which is different to quad levels, which are 25, 50, 75, right? But I'll talk to you about that inside Red Pill later at a later date, because I've still got to do a course on that, on the not a course, but you know what I mean, a slide on mitigation. But 50% is the purest sense. So if you're going to look to frame a trade, just always look for your 50%. And if it goes before or after, you just miss the trade for now. Just base it on that. But when price breaks here, you're looking for price to come mitigate this range. So this now forms a buck stop. So when price mitigates a high, it has no reason to go back through that high. Okay, so you can frame your entries below this high. Right, so you guys will know my mitigation 62 model, which is a continuation of that. Look for price to come back to 62. Shouldn't go above the mitigated range, right? So I often use mitigated ranges either to enter on if I miss the primary, right? And this is literally top, you know, there is no drawdown here, right? That is to a tick. Or I use it to frame a buck stop level. So for example, if you know, if I didn't get in on the primary and I didn't get in on this secondary, you know, I could look for if I had a 1 minute dealing range, for example. So if we go so on our X levels, right, this high to this low is would have been your X levels at this point in time, right, on the 1 minute. Okay, so if I had missed this mitigation and I was still anticipating price to displace, I could use the X levels, right, and just look to frame an entry on a premium, okay, for continuation, and then my stop would have to go above that high. Okay, so it opens up my stop a little bit, which is not how I usually trade. But if I am going to do that, for example, if I've built a huge cushion, or I'm super confident that price is in a sell program, then I'll allow this, right? But that's how you use mitigation, basically. So you'll notice that mitigation is on the left hand side, right? Whereas a return to would be on the right hand side of price, is what I'm talking about here. So if you'll see a lot of newbie traders on Twitter, not knowing what the fuck they're doing with dealing ranges, but they'll be like, okay, well, whatever this low is that they depict for price to come back up into a premium. So price returning into a premium is on the right hand side of price, right? So this would be a return to, and on the left hand side it's a breaker structure. So here, breaker structure, mitigation. This range here, return to, is a return to leg, right? Makes sense? So mitigation and return to are two different things. Okay, so the best way to look at it would be to look at this, right? So if you had price break like this would be your unmitigated range, right? So if price came here and then it went off, right, you'd have an unmitigated range on this low.
Are still falling on children in Ukraine. I've been there and I've seen for myself how the war is tearing.
Okay, so if you were a return to trader, that would be a return to, right? So you can start utilizing X levels, right? So if this comes back into a 5, for example, if these are 1 minute dealing ranges, red pillars will know what I'm talking about. These are 1 minutes, right? And then you have a fail, right? And then price comes back, and then this is a 5 minute DR, right? You've got an unmitigated range down here. Well, now you've got mitigation in confluence with 79x level on a 5 for price to then rally, right? To go and clear out, taking offset accumulation basically, right? So on the left hand side, this would be a breaker structure, whereas on the right hand side of price, this is a return to, right? This is a return to. Make sense? So if we look at where we've come back to now, this is X levels on the 15, all the way back up at 62, right? So cheers, Steve. So this is that piece of price action on the low. Right here. Right, so inside of here we had our turtle suit, right? Our SMT. This is our X levels. Right, so in here, this is our 15-second if 2022, which forms inside of the premium of our X levels, right? On the 1 min DR. Okay, so SIBI on the sell side if violated bag fair value gap. So in the if 2022 you're looking to enter on the fair value gap, stop goes literally inside the bag. If it goes into the bag, it's not an if 2022, right? And these are aggressive, really aggressive. Okay, so the trade this morning that I took was here, right here. All right, stop in here. Looking to take price back up into X levels, right? So now we're just doing the principles of price. L, right? Internal range, external, 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 external. Okay, so if we look at, you know, context as well, whole site numbers, right? Big fat round 19,800, right? So everyone who's just piled in short is likely to go and have themselves their ass handed to them, right? Also, fair value on the daily dealing range. So anticipating that price is likely to pull back once we hit fair value on this daily. Also, 70.5 on the X levels on the weekly, right? At the upper quad of the weekly BISI, right? So stack confluence is on a higher time frame. Okay, and then we have our higher time frame divergence. So at the moment, I'm looking for price to come and drive out these highs up on the high, all the way up here, which would take us up to, where would we be? Uh, 38. Does that make sense, Joe? Because I'm sort of talking to you here, bro. But if I don't even know if you're here. Is he here? Well, I hope someone found that useful. Oh, he's here, is he? Don't know what I've done with the chat. Where's the chat gone? Yeah, so although I need to watch back the earlier part, I need to understand the difference between quad and the other levels you mentioned based on different percent. But yeah, you said you haven't made slides on that yet. Yeah, it's so mitigation. So if you understand now what mitigation is, right? So for example, here's another example of it. Right, so this low, this high. Right, so mitigation, 30, 50, 70. They're your levels, 30, 50, 70. Okay, now there's reasons why you would utilize 30. I'm not going to talk about them on YouTube. I'll teach you that at a later date. But you have 30, 50, 70, right? There's your breaker structure. Okay, whereas this would be your return to. Right? So that's your mitigated range. Whereas a fair value gap is quads. I very rarely use quads on the one because I just eyeball it. But if you're using my H1 to M5 model, for example, you know, that would be an example where you could utilize your quads. You know, so if we go up here on the hourly, for example, so our trade short yesterday, our absolute beast of a trade short yesterday, was applying this principle. Okay, so this SIBI quad levels, but these quad levels are 25, 50, 75, right? So if you're looking for aggressive displacement, you're looking for price to go out the lower quads, so 25, 50, right? So stack confluence, this old swing low at this lower quad, right, is classic support and resistance. So you'll often see me put high quad levels on higher time frame fair value gaps, right? And then I'm going down the time frames to dial in. Does that make sense? Yeah, so people overcomplicate Earl and Earl, right? So just looking for this common drive out, this high up here. People overcomplicate Earl and Earl. The easiest way to manage it and to consider it is just looking at a chart. So for me, anything inside of price, right? Anything inside is internal. Okay, so all of this is internal range. All of this is internal, right? The way that ICT does dealing ranges is completely different to the way I do dealing ranges, and so the way that he'll talk about Earl and Earl is, for me, is a little bit skew-if. Like, he'll have internal range and external range inside of a dealing range, which for me is just convoluted, right? It doesn't make sense to anybody. So for me, it's very, very simple. It's very, very simple. Price inside is internal range liquidity. So price inside is internal range, all internal, right? Anything outside of price is external. So this is, anything in here is internal, inside of price. Anything outside is external. So when you're going short, you are taking external, right? Because it's outside of price, to go and drive internal, which would be inside of price, right? And then the flip side of that is, if you are going bullish, you're taking price, which is inside, so internal range, to go and drive external range liquidity outside, right? So it's either Earl, here goes, here's my horrible drawing. It's either Earl to Earl when bullish, or is it Earl to Earl when bearish? Alright, it's only ever that. There's nothing else. Doesn't matter what time frame you're on. Right, so even if you're trading on a 1 minute, it's the same principle. Right, so if we're trading here and we're taking, for example, that, you know, if you're entering on that low, that little turtle suit, that's a sweep of internal range to go and drive out external range. If you're looking to take price short, you would sweep external range, because it's outside of price, to go and drive internal, which is inside price. Right? So the whole shit that people talk about with internal, external, all being inside the same dealing range, it's just an absolute mess. Or to me, it doesn't make any sense. So it's just that easy. You know, don't overcomplicate trading. It doesn't need to be overcomplicated. You know, people like to make them sound good by just making shit up. Oh yeah, this is external range. No, it's not. Trading's hard enough as it is. you call it BIE and SAI. I call it buy and SAI. Good for you, bro. I have no idea what that means, but as long as it makes sense to you. So what we know, what do we know about if 2022s? What do we know about an if 2022? Exactly. So when price fulfills its target, that bag becomes a reference point. So this this BISI for me is worth tucking into your chart, because you know that that's a bag from an if 2022. So it's likely price will come back and revisit this bag once price fulfills its objectives on the highs. For me, I'm looking for it to come and sweep out of this high up here. Yeah, exactly that, Jamal. You would have that. Whether I trade it or not was probably be a little bit sus, but because ultimately I'm looking for lower prices. But in terms of what we were talking about yesterday, in terms of our target, we fulfilled it yesterday, right? You think we'd write the markets, right? So our objectives yesterday, right? Come and take out, oh, fuck off. Come and take out this, right? Which we've gone and done. So again, tying into the principles of price pulling back, now it's fulfilled that objective on the low. So for me, long-term macro, I'm obviously still bearish until my 3 drives breaks, because I know that this is a mass accumulation of short positions by institutions, right? So my 3 drives to a tick, which we've been trading, form context for all of our trades for the last few days, right? It's how we knew yesterday inside of RP to trade aggressively short, knowing it's going to be a sell day because of this. Whenever you see it, you know that price is going to distribute. Trust me when I say that. Okay, so this 3 drives, my 3 drives on the high, boom. All right, if you don't know what the 3 drives is, there's a free episode on YouTube, which formed right up in here, right? Which is this high. But what validates a high probability 3 drives is when it forms inside of a higher time frame OB, which is right here. Okay, so I know that this is a high probability 3 drives. So what can happen is price can come all the way back to the order block out the back end of the 3 drives. It can do that. So if price gets back up into here, I'd consider shorts again to drive the market lower, right? As institutions refill their boots. So 38 is the target here. So when it gets to 38, you can apply the same principles. You can look for your tail suit. You can look for a pullback, right? Good morning, Marius, mate. How you doing, bro? How you been? Oosh. Oh. Sold that so early. Oy. So today, my objectives are very, very simple. For me, it's just basics today, right? Yesterday we had an absolute monster day. Absolute monster day. It's one of my biggest days. So to keep the ego in check, I'll be just trading basics today. So in terms of our, we can start shifting this. In terms of our hourlies, so our hourly DR. So right in here we have this rejection block up on the hourly, right, which is up in at 38, which would be 50% of this hourly rejection block. The daily is still the same. So for me, if we start driving, start driving through 38, I'll be moving to the sidelines. So just in terms of wider context and what we have, up here we still have this reclaimed order block. So again, as we know, this is a mass institution block of cells, right? So this is a mass accumulation of short positions, So we've got 3 drivers into a reclaimed order block, right? This is mega bearish, like mega bearish. Good stuff, Marius. Good to hear, mate. So there's your 38. So make sure you take your 10 handles. Base hits today, guys, right? Base hits. And there you go. Right, so 38. There you go. There's your trade already done today. If you want to hold runners, take it back down to a discount on a 5. So in terms of if price is going to want to step up, you've got the X levels there, but you've also got this this one of my unicorns, right? So you have this Civi on the 5 that is supported by this order block. Okay, so if you want to take it back, you'd want to take it back into a X levels on the discount, right? So there you go, guys. There's your 20 points. Anybody capture that short? Anybody? Anybody? Am I talking to myself today? Am I talking to myself? By the way, guys, that is top ticking the range. Anybody catch that short pullback? I'm just going to go back into red pill. It's weird. I'm talking to myself. Not talking to yourself. I friggin' am, mate. I am. Got some. Yeah. Are we gonna get the bags up in here? We're gonna get the bags up in here. What are we doing? Are we gonna keep it low key on our little base here? Or are we gonna get some yeets? I think we get some yeets up in here. Posh. Yes, sir, baby. It's what we do all day, every day. Print. Bag it. Bags and tags. Bags and tags. Where's my bags? Where's the bags at? Where's the bags at? Where you gone? There's the bags. Oh, get some. So, well done, time to shine. Trying to process the trade. What do you mean, Joe? Did you take it, or what's the crackle at? What's the crack? So what's cracking? So what we were talking about earlier, in terms of unmitigated ranges. This is an unmitigated range. Got a small at 29. What do you mean? You exited at 29. Yeah, well, there you go. You got your 10 points, bro. That's all you got to do. Do that once a day and change your life. Yeet. All right, and then you can start scaling up from there, right? When you get consistent at just taking your 10 handles, boom, 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 then you can start scaling out, right? Entry at 29. Fucking hell, Jesus. Chased it. Room for improvement, bro. Room for improvement. We are looking for top tickos. Sorry. Sorry. When you get it, bro, your life will change. Trust me when I say that. Trust me. Cheers, Jamal, mate. Appreciate that, fam. Did you take it, bro? I know you missed out on the IF 2022, which is I know you love that model. How comes you missed the IF 2022, bro? That's I know Leo's all over the H1 to M5. You're the IF 2022 dude. Still rocking from that trade, bro. Fucking hell. So if you want to hold runners, be my guest, right? If you want to hold runners, be my guest. Okay? You're probably going to have to sit through a lot of choppity chop sueys. And also you need to know that you've got this unicorn on this low. So price is going to have to break that low. Okay? Which is what I was talking about, right? You want to be mindful of these propulsion blocks on this low inside of the X levels on the 5, right? I would anticipate price to come back into this range, however. So up on this high, we have mitigation if price wants to get back up there. So the way I trade is I would not even consider entering in this, just personally, just the way I trade. Yes, you could do it, right? Taking price back down to a prem, scalp that range, you could do that, but there's reason for price to come back up and mitigate. So for that very reason, I just wouldn't trade it, right? If you can't get in on that, you're not good enough, in my view. All right, if you want to trade this, secondary entry shit, there's other people who can indulge you in that trash, right? But yes, if you are holding runners, you'd be holding runners to get price down into these lows. Okay, but if you are entering for your first time, I would not be entering. It's just how it is. And if it goes and I wasn't in that trade and it goes from here, I wasn't good enough for being up here. It's how I keep myself in check, right? My emotions are tripping with me since payout. Yeah. What did you get? What was your payout in the end, Jamal? What did you get, bro? What was it? Was it 4Gs or something? Guys, if you find value in this stream, do consider smashing the like. Especially if you've bagged with me. Fucking hell, that'd be a nice thing to do, wouldn't it? God, wow. Wow, can you imagine? Should make that a new rule. If you bag, you like it. 9 of you on stream, 5 likes. You're all assholes. You're all assholes. All assholes. So fill on this Bissy here. Could easily pull back up into this this Sibby here from this this little Bissy fill, unmitigated range. Right, there's 2 of you. 2 of you are little fucks. Guys, if you can keep the chat on YouTube, it helps me out a lot. Cause I have to keep moving my screens, and it's just annoying. Like, so if you wouldn't mind, it'd be appreciated. Oh, no, I've already fucked up my screens. Today it will be good video to watch up for sure. Watch back. Yeah, don't forget, Joe. There is a private YouTube channel inside of Red Pill, mate. So if you go to the live session recordings or live recordings and you go to the top link, that's a private YouTube channel. For now, I am the parlay king. Get some. 1 second, guys. Yeah. So I'm on stream at the moment, bro. So I can't show you. But yeah, if you go into one of those and you go to the top link, you'll find it. Eight. I was foaming about the missed short. My emotions are tripping me, but yeah, should be 4, but was two grand. What happened with the other 2? Don't tell me they denied it. Did they deny it? Bro, that's what they got me on. That's why I left. That's why I left them. You're gonna have to leave me. What difference their private YouTube from this one? There's source on there which I don't share on global YouTube. Jamal, can you go on YouTube, bro? It would really help me out, mate. Joseph, there is a gap on 1 min at 455. 455? Oh, time. 455. 455. What time frame are you talking about? Is that 1 minute? No, this is a you're talking about this here. This is a volume imbalance. There's a volume imbalance. So that's a volume imbalance. Whereas if you have if this candle had no wick, right, or that wick, and there was a gap with no price printing in it, that would be classed as a void. So that's a volume imbalance. If the wick was that high, this piece of PA in here would be a void, all right? But that's a volume imbalance. All right, so no, to answer your question, it does not form part of the what am I saying? Fair value gap. The only time it does that is when the wick is sort of inside of it, so then you would include it, right? But the fair value gap is formed from this candle's low to this candle's high. That's your fair value gap. For example, you can get it where you would include this if this wicked, right? And this was like here, this wick was here, then you would utilize it. But that's a bit of a nuance. So as I mentioned, right, from this little Bissy field, so like these are all little scalps, right? If you want to scalp, you want to be a little scalpy trader, you can be a little scalpy trader. I'm not a scalpy trader, but as we were talking about, right? So let's have a look. Let's go across over here, drop down to the 1. Keep an eye on ES. If ES starts punching through this high, you've got divergence on the high. However, what we do know is that we have this little double top, oosh, and we have the turtle. So this would be what? What would be this called if ES runs that high? Red pillars. Anybody? Yeah, you don't want to be careful here because you've got delayed SMT at the moment, right? Yeah, delayed SMT, bang on. 1600 on one trade was a 6. Oh yeah, I remember you saying. Jamal, do you realize you're posting that on YouTube, bro? On 15 sec, lots avoid, lots avoid. Morning, Andy, mate. How was your day yesterday, Andy? Was it good? Did you finish green skis or what skis? Yeah, so ES is now taken that high. There's a mitigation on that high. Yeah, good stuff. Good stuff. Good stuff. So let's do a poll. Let's do a poll. Who's already bagged on stream? Start a poll. Just so you know, guys, it's going to be another one of those days where I'll be finishing slightly early today. As you know, I'm focusing on this X levels at the moment. So I'm just doing my base hits today, then I'll be dipping off. No, who's you little 100% no? Oh, I know that's a lie. I know that's a lie. Let's get your votes in on stream, guys. Get those votes in. Yeah, I know, but you joined late, Andy, mate. What do you want me to do? What do you want me to do? I can't make you get out of bed, bro. Oh.
There are two things that I did to scale
Oh,
this
yeah.
coaching company, add clients to well over 8
What'd you
figures
do, mate?
in total revenue.
Alright, so that one's done. Void 15 second 12. At 12? What do you mean at 12? Oh, yeah, I'm with you. I'm with you. Alright, let's have a look at this. See what's going on over here. Bam, 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 bam. Alright, so for me, just going to move to the sidelines here. Just going to wait to see where we are closer to the open now. So already taken my trades this morning, taking a long out of the IF 2022, taking a short off that rejection block on the hourly. So just going to sit patient now and just wait to see where we are going into the open. So that's going to be it for me during London. Let's give you my London trades. So I'm just going to take a quick break, guys. I'll be back in a second. I'm not looking to trade anything at the minute. Can you hear me? Sorry, guys. So if you're still holding runners, you're just holding runners to drive back into this unicorn. But you should have already paid yourself, right? Inside this little biscuit that we were talking about. Just a case of holding runners to drive out the lows. If it takes out this high, I'll be done. Yeah, guys, I'm on YouTube, guys. So sometimes it will mess the audio a bit. So it's going into a period of chop here, period of consolidation. I'm looking for price to drive back down into here. 10 minutes left on this hourly candle. Want to be careful. If you've not paid yourself already, you want to definitely make sure you've paid yourself, right? You've got this breaker structure here. So price is broken, come back down to this X levels on the 5, breaker structure, return 2 of that range. So price is going to drive out the high, it's going to go from here. But you've got mitigation sat here at 35.
Morning, Rum. Give the cat your smartwatch. Onken, make time to feed your inner happiness.
Nothing beats a Jet2 holiday. So book summer now.
So just going to consolidation, price has gone slow. Just anticipating price to draw down, just holding runners at the minute. If it takes me out, not too bothered, already bagged. that has currently delayed SMT up on that high. For me, my buck stop is above this 41 at the moment. My run is above 41. Fair enough. So that's going to be it for me today, guys, on YouTube for this London session. I'm going to go and do something else for a bit. Already taken my 2 trades. That just took out my runner there, and I'm not looking to trade again until the open. So I'll try and jump back on YouTube for the open. But that's going to be my London session wrapped up. Alright, guys. So I'll leave you guys here, and I'll catch you closer to the open. Take it easy, guys. Have good ones. I hope you bagged off that short off the high at 38. Alright. If not, I'll see you closer to the open. Take it easy, guys. Abosh.